What's going on, traders? We got a few things to talk about, but before we start, like, subscribe, comment your thoughts below. Let's get into the video. So today was pretty boring, right? There wasn't really anything crazy happening. We had a few knee-jerk reactions here and there. Bears constantly trying to push the SPY down, the market down, whatever the case may be. And bulls stayed resilient, right? And I want to go over a few things here. Okay, so if you're new to the channel, I talked about this in my last video. We're looking at the SPY daily time frame. We're looking at this head and shoulders pattern. And I'm going to try my best not to repeat the same things that we've already seen in the last three videos. But if you're new to the channel, I will try my best to keep you up to date here. So we have this head and shoulders pattern. We have our shoulder here, head here, shoulder here. And in this area here, we had a lot of bearish candles form. I mean, there's nothing but huge bearish engulfing candles all in this area, right? And when you're looking at the bullish candles, you barely see anything. I mean, they're very small in comparison to the bears. And so what I told somebody in the Discord, what I pretty much told the Discord is that I imagine market makers are aware of this area here. I imagine they know that bears are like drooling at the mouth, waiting for this retest up here. And if we do get that retest, it can go as high as about 548, 550 range, or we could just sit at this gap fill at 540 and just immediately reject. Those are your two options, in my opinion. But what I will tell you is that, once again, like I always say, gaps have very, very strong support and resistance. So I wouldn't count on us immediately or even going all the way to 550. 540 seems like a actual target that could potentially happen. We wick off that and we could potentially sell off here. Now, we've been here before. We've actually seen this exact movement happen before besides the daily SMA. So what we're going to do, we're going to go back in time. We're going to go back in time. We're going to go back in time. We're going to go all the way to 2021. Bear with me here. And as you guys can see, there's a head and shoulders pattern here. We have our shoulder here, head here, shoulder here. The projected move is probably a lot smaller than the current one we have. But overall, we're pretty much looking at somewhat of the same type of scenario here. And there's multiple scenarios like this we can go over. We bounced here, we bounced here. There's a wick here. I'm pretty sure you guys probably can't see it, but there is a wick here bouncing off the trend. There's a wick here as well. We bounced off the trend and then we broke down. But look what happened when we broke down, we broke below the 200 daily SMA, and then we attempted to retest, but we never got there. And there's even a fair value gap here in this area, and we didn't feel that fair value gap until we got over here. Something to think about. So we broke down, we broke below the 200 daily SMA. We tried to retest, we double topped here. We have our top here, and then we broke down even further. And I wouldn't say this double top actually played out, but it's up to you. It's all about perspective. But regardless, as you guys can see, despite this trend being here, we never got to retest it. There is another scenario here as well. Let me see if I can find it. Probably won't, but there's multiple scenarios like this where we never retested the trend. Okay. So is this it? So maybe this is it right here. We didn't retest it. We didn't retest the trend until later, I would say. So even right here, right? Look how long it took. We didn't retest this trend until like all the way over here somewhere. But same exact thing, right? Somewhat same, okay? We bounced here, we consolidated, we played games all through this area here. We bounced here, we bounced here, we consolidated here, we broke down, we retested the trend, and then we broke down even more. But when we broke down, we never came back again until like further out. So hopefully we're getting the idea here. And what I'm saying is that, and I explained this in the Discord, that we may not get all the way back to 550. We could, by all means, we could. Okay, we could. We got a lot of news this week. Maybe some of that news kicks in, comes in good, whatever the case may be, and we do get that actual move to 550, 540 range, right? Or we immediately reject from here and start to head lower. You guys already know one of my price targets is 504 on the SPY. This was before the first initial drop or initial correction, whatever you want to call it. And we dropped as low as about 510. So got pretty close to our target. But I'm still counting on that 504 target, 500 target, which is right where the daily SMA is before we potentially see another bounce up. We may even go a little lower, may tease below the daily SMA because we've seen that happen plenty of times before, where the market likes to tease around the daily SMA, pretty consolidate or break a little lower, and then Uno reverse everybody and starts to head higher. So that's another scenario. What I'm saying here is to pretty much be cautious in this area. Tomorrow we do have news, we have PPI data. We have a few things coming in this week. Tuesday, we have PPI data at 8:30 Eastern, core PPI, and then we have a Fed member speaking, FOMC member speaking at 1 p.m. Eastern. And then Wednesday, I believe is probably going to be our biggest day out the week. We have core CPI as well. And those are the things that you should keep in mind heading into at least the middle of this week, right? And what I will say is that if given how fragile the market is, we talk about this all the time, and I've said this before, where when bears are in the market mixed with bulls, the market becomes very fragile. When bulls were in complete control of the market, no bad news, hardly any bad news could really drop us, right? And that's because bears were pretty much non-existent within the market. We had a few dips here, cool off periods here, sure, sure, but almost immediately we would rally all over again. But now we're not looking at that same scenario. We're looking at a scenario where it's clear as day. Again, I showed you guys that bears are in the market, and any bad news is very, very sensitive to the market. We saw what happened on unemployment claims. So imagine if CPI comes in hot. If CPI comes in higher than 3.0, I think we're going to absolutely tank. Now, you guys know I'm not some news guru or anything like that, but given with how fragile the market, how sensitive the market is to news, I'm going to assume that based off what we saw off the last unemployment claims, that CPI comes in hot, things could get really bad. That will pretty much signal that we may not get a rate cut in September, which I'm really not counting on. I honestly don't. I wouldn't be surprised we don't get a rate cut in September. I mean, we were supposed to have six, so I mean, I wouldn't have my hopes up. It's up to you to do what you want with that information. But let's move on. Let's look at the triple Qs. So triple Q's pretty much in the same predicament here, but it looks a little bit different, right? So we go to the 4 hour time frame, and I actually erased this pattern on the SPY, but we go to the 4 hour time frame here, and right now we have somewhat of a flag pattern. Okay. Now, this is not to be confused with a bull flag. This is actually a bear flag forming. Okay. Now, another misconception a lot of traders have is that flags have to be rectangle. They just have to look like a flag in general. And this looks like a flag. Okay. So I will say this could potentially be a bear flag on the triple Qs. And I even said in the Discord that we could just continue to grind higher, which will be really, really annoying. We could just continue to grind higher until we get some type of news, which actually ended up happening today. We just pretty much grinded the top of this flag pattern until the end of the day. And we pretty much hit this gap fill, and we can continue to do this. Am I counting on it with the news that's coming in? No, I do think we will see some more volatility, but at least today I wasn't really surprised. Now we go to our daily time frame here, and once again, we have us a head and shoulders pattern. And as you guys can see, we broke out of this channel that we've been talking about on this YouTube channel for quite some time, like a very, very long time. We probably got like 10 videos talking about this channel here. This is a year-long channel, all right? And we finally broke below it. We've been in trading in this range for about a year now, guys. We bounced here, we consolidated here, and then we finally broke down. We rejected all up in this area. We rejected, Bulls got trapped up here actually, and then we rejected and we broke down even more. So I do believe that pretty soon, this is actually off a little bit, apologize about that, that pretty soon we could be looking at a sell-off. Now, our saving grace, I've said this before, is that if you're bullish, that you're still above the daily SMA. That's your saving grace. Your key levels to look out for, and I meant to mention this on the SPY, as long as the SPY holds above 532, we saw pretty much a glimpse of that where it tried to get below 532 and Bull stepped in immediately and we jumped back up to 533. So as long as the SPY stays above that, there's potential for more upside. As long as the triple Q stays above 450, there's potential for upside. So we saw attempts to get below both those levels, and bears failed to make that happen, which I'm not surprised. For those of you who are bearish, including myself, I'm more bearish than bullish, but I still expect a little upside within the market. For those of you who are bearish, you shouldn't expect that to happen when we got news on the way. And news can absolutely change everything right now. So we made those levels weak. If anything, we made 532 weak. We made 450 weak. So there is potential that we could start seeing a sellout. Let's go to the 4 hour time frame so we can get a better look at this. Like I said, we're just pretty much grinding the top of this flag. I mean, we go smaller. Sorry, this looks crazy, but we go to a smaller time frame, and as you guys can see, we're just pretty much been grinding up here, and we might keep doing it until we get this gap fill at around 460, 458 range. Or if news comes in and the market decides to actually react to something, then we could just see a quick move to the upside, knock it out, possibly sell off. Now, let's talk about Bitcoin. So Bitcoin is the main thing that just is not convincing me that the market is going to rally or go crazy right now. And that can absolutely change. I have nothing against changing my sentiment. Okay. I am okay with being wrong, but right now everything still looks like we could see more downside. On Bitcoin, I told you guys about this head and shoulders pattern. We retested 62K. We got our shoulder here, head here, and we're still forming this shoulder here despite this huge engulfing candle right here where it dropped down. We're still at this range. There's a wick all the way down to at 58.5, not 58.5, 58,500. So we're still above that range. This candle pretty much bounced from there, and then we are still consolidating within these guys here. So there's still potential for more upside. Right now, I told the Discord that I think Bitcoin is going to head to 55K. Whenever that happens, I don't know. Could happen tomorrow, could happen sometime this week. But as long as we're below 60K, I still believe that Bitcoin is going to head to 55K. And I still have a target of 45, 44K. Now, what would change my sentiment is that Bitcoin getting above 64, 65K psych level in order for me to start saying, okay, Bitcoin might be really bullish. But right now, everything points to downside. We have a head and shoulders pattern here. We have this trend line break. We retested the trend. We retested resistance at 62K. And then we even retested the daily 200 SMA. So if we're going to assume that Bitcoin is the leading indicator of the market right now, there's potential for more downside across the board. All right, so let's look at the VIX real quick, and then we'll get into what I'm seeing on as far as stocks. So the VIX, so right now, the VIX pretty much did exactly what I said in the last video. It retested this gap fill, it wicked out of here, and then it wicked right back on top of this channel. Let's actually zoom out so you guys can get a better view if you're new. But as you guys can see, we've been trading within this channel for quite some time, a very, very long time in the VIX, months, probably a year, whatever the case may be. I'm not going to count all that. But regardless, the VIX could bounce from here. And I told you guys, I think the VIX is, at some point is going to revisit the $40, $50 range. Okay. And in the last video, pretty much called it to a T, actually. I said we could come below this channel, get below this channel, fill this gap real quick, and wick back up. And it looks like we did that. Now, a doji just shows indecision or indecisiveness, if that's even a word. That it just shows that the market isn't sure yet. Okay, so I'm not going to toot my own horn and assume that we're just going to bounce from here, but it is possible that we just immediately bounce from here. Right now, this just shows uncertainty. That's the word I was looking for. All right. But yeah, uncertainty. Now, if we just so happen to break back into this channel, my logic still stands, guys. When we break back into channels or roll back into channels, chances are we're going to continue in that direction. So if the VIX just so happen to break back into this channel, we can see a move back towards the 200 daily SMA at around $14, $15 before we see another move higher. Okay, so that is my expectations as far as the VIX. I don't think the VIX is just going to get back in here and just stay in here. It is possible, but I don't think so. I think it's going to just pretty much roll back out if it ever does get back in here. But for now, it jumped back out of this channel, so there's room for potential upside here. And you guys know that the market would go do the opposite of the VIX. It's inverse of the VIX. Now, let's look at Apple real quick. So in regards to Apple, so right here, we're looking at the daily time frame, and Apple has pretty much retested the bottom of the symmetrical triangle and is pretty much filled this gap. Okay, it filled this gap at around 218.5 to 19 range, and right now we have a potential reversal pattern. This is a hammer pattern as well. and it's coming off an uptrend, so it really can go either direction. I'm not gonna lie to you guys, okay? I'm not gonna sit here and act like it's just gonna immediately go down or anything like that. There is potential for upside. Inverted hammer patterns are bullish patterns, but they're strongest in a downtrend. Now, right now, this is a short-term uptrend, so there is potential for a sell-off. We go back in time, as you guys can see, inverted hammer pattern off a upwards move broke down. All right. There's plenty of more, but I probably lost of them. I probably should have just marked them, but hopefully you guys get the idea. There's more, but regardless, yeah, so Apple's in a weird spot right here. If Apple gets back below 217, 216.5, then I think Apple is going to start selling off. All right. And then we could potentially see a move as low as about 195, given the market sells off and given that the Apple actually follows the market, because we see all the time that Apple likes to do what is its own thing sometimes. So if Apple sells off with the market, then that's pretty bad. If Apple goes to the upside with the market as well, then that's good, obviously. So for now, Apple is simply retesting the symmetrical triangle. And like I said, guys, a lot of stocks, a lot of ETFs, a lot of futures, a lot of these futures are looking exactly alike. They're all retesting a level or a pattern, something to keep in mind. Let's look at TLT. So TLT has finally, let's go to a smaller time frame because that looks hideous. We're going to go to the 2 hour time frame here. So TLT has a inverse head and shoulders pattern, and the measured move is about $98, right where these guys are. I do think TLT is going to continue higher from here, at least. And as you guys can see, let's actually mark this out. As you guys can see, towards close of day, where was it? Here it is. Towards close of day, TLT went higher, and then it pretty much just mounted 96.6, 96.555. Okay, so I think TLT is going to continue up from here. It broke the neckline at around 96.55, and it finally held above that. It was having a very hard time holding that. Obviously, next we want to get above 97 point, I would say 2, and then we can start heading towards that 98 level. So you really have to have patience when it comes to TLT. It's a very, very slow mover. You definitely want to have dated contracts if you do trade it. Right now, we're in 100 calls for September 20th on TLT. So I do have an expected move of 105, 110, but we take profit when we like our profit in our group. So we don't necessarily have to wait for those targets. But that is a target that I am looking for as far as TLT. It's also important to note that when we look at the weekly time frame, hopefully I still have it marked. I probably don't. There we go. There's also an inverse head and shoulders pattern here, and we pretty much, let's actually mark the neckline that we broke here. So here you go. So you broke your neckline here, you broke out, you have a dark cloud cover, which is a bearish pattern, and it looks like we're trying to break higher. Here's your resistance here. We are currently above that resistance right now as far as the daily and smaller time frames, and we are above the 200 daily SMA. So I will say I do think TLT is going to continue to head higher as long as the market drops, obviously. And that's what I'm looking at as far as TLT. Let's look at Tesla real quick. I was looking at Tesla earlier today. This chart might look crazy because I don't know what I did with it. Okay, here we go. So, like I said, a lot of these charts just look the same. So Tesla is below the 200 daily SMA. It's below it right now, and it's pretty much fighting for it's pretty much consolidating within this range between 200 and 194. If Tesla breaks below 194, then you can expect to move to 190. If it breaks below this trend, then Tesla's easily going to 180, 170 range. So that's really all I have for Tesla. As far as upside goes for Tesla, we want to see it get back above 205 psych level, and then it'll start filling this gap at 207, and then it'll get really illiquid if it starts heading above 207. It gets really illiquid all the way to like 220, 230 range. So something to pay attention to as far as Tesla. Let's look at the Russell real quick, and then I'm going to get you guys up out of here because this video is getting longer than I intended it to be. So as far as the Russell goes, Russell is what I will say is that, and I said this in the Discord, the Russell is very, very sensitive to news. That's pretty much all it moves off of. Like it just reacts to news. Okay, it really doesn't move with the market. I mean, it moves with the market, but it's really like lackluster. The Nasdaq can move like 800 points in one day, and Russell will move like $1. Okay, so Russell is very, very sensitive to news. So I do think the Russell, if it as long as it stays below 210, that the Russell is going to see more downside, and they can start heading as low as about 195, 198, 195. But for now, if it stays below 210, then pretty much bearish. If it starts getting above 210, then it can start filling this gap fill all the way to 215 range, 215, 216 range, and then we could talk about possibly more bullish upside from there. But for now, that's what I'm looking at as far as the Russell. And that's pretty much what I have for this video. What again, guys? The notion still stays the same. Be very cautious. Have dated contracts. I know it sucks. I know it sucks having dated contracts. You want your money right away. But as you guys can see, the market is playing games, it's playing mind games, and that's pretty much what it wants you to do. What I did say in the Discord is that market makers know that bears want this target here. They know. All right. They're not stupid. Okay. They know. And like I said in my last video, if it looks too obvious, it may not go as planned. Okay. If the SPY, the Qs, the NASDAQ, Bitcoin, if all of them are looking exactly the same in regards to retesting a pattern or retesting a trend, it might not go your way. Okay, it might just not. And that can either equal bullish or a sooner move to the downside, like immediately from here versus a retest from here, like we saw in 2021 when I showed you guys that other head and shoulders. So just something to keep in mind. If you want access to our signals, Discord link is in the description below. If you want to be prepared for the possible next sell-off, feel free to join our group. We're slowly growing, and I'm very grateful for it. I'm still getting used to just the growth that's happening in our Discord group. People are asking me more questions now, and I'm just like, whoa, you know. So I really, really appreciate the support, guys. I'm going to pay you back. I got to do a giveaway. It's only right. I say once we get to maybe 100 members, 150. I think we're at 100 members, so maybe like 150, something like that. I don't know. I'll do like a huge giveaway, like a $500 giveaway, and don't worry, I will actually pay out my giveaways, not like these other YouTubers who try to get subscribers doing their giveaways or try to get Discord members with their giveaways, and then they never pay out or they pay some bot that's actually their own account. So that's my little rant there. But Discord link is in the description below. If you want access to our website, or not our website, but text messages directly sent to your phone, where you get my signals directly sent to your phone, it's through a third party. I won't have your number or anything like that. It's completely safe. Um, Feel free to check out our website below, subscribe, and everything else will be pretty much self-explanatory. It'll cost a little more because I have to pay the third party for it, but otherwise you get text messages, you get my alerts on when I'm in a trade, when I'm out of trade, so on and so forth. And that's all I have. So be prepared for this week. It's going to be a crazy ride, guys. Until the next video, traders, have a good one.